Gold and silver retreat this Thursday from earlier week gains, but our next guest says there's still a case for the precious metals, especially silver. Joining us in studio today is Mike McGlone of ETF Securities. Mike, thanks so much for being with us.
Thanks for having me back.
So look at silver, up 8% just in the month of October here, Mike. It's really stealing the show. The question is, can the PMs keep up this momentum for the rest of the year?
Well, I think so. Let's first look at silver. It's basically the only commodity in the entire Bloomberg Commodity Index that's really up on the year or unchanged in the year. I think cotton's doing a little better, but you can't really, it's hard to invest in cotton without futures.
Right.
So it's shown impressive resilience. And if you look at the shifts in supply demand, silver, they're very favorable. I mean, like imports from India, off the charts, new records. Coin sales, off the charts, new records. Supply declining. And it looks like we've seen a shift, but there's still a shift in sentiment in gold too. A lot of that's been the stock market stopped going up. All this Fed tightening expectations that have been priced in the forward curve have been diminishing. I think the one key final factor for these precious metals to resume higher is reducing the Fed tightening expectations and or the dollar to not go higher, which are probably highly correlated.
Well, you mentioned that precious metal indicators have increased sharply, but what's the key factor that's going to help gold here?
I think the key thing will be Fed tightening expectations. It's the primary final factor, I think, that's holding it back. So if you look at the forward futures curve, the market's still priced for tightening, a lot of tightening, as it expects the U.S. economy to expand, inflation to pick up. But as you've seen for a lot of my indicators, almost all the backward-looking measures of the market of inflation and forward-looking market measures are still pointing downward in terms of inflation. So that's the dichotomy, and it's helping the dollar strength. So dollars related, Fed tightening is related, and I think that's the final factor that needs to fall wayside, and then gold and precious metals should rally.
Right. Well, you also mentioned if the stock market continues to mean revert, then Fed easing will come back into the equation here, benefiting gold and silver.
Well, I think that's something we can almost virtually guarantee. There's not too many things guaranteed in life, but if what happened in August, if equity market continues to plunge and volatility goes up, what's always happened is the Fed usually is there to save us with easing. And it certainly cannot tighten in that environment. It just would not be prudent. So that's, I think, a given. The question is how much does it go down? And or can the stock market go down if the Fed makes the potential mistake of hiking rates before when they really shouldn't be?
All right. Well, I want to get your thoughts on the PGMs, the Volkswagen scandal. We saw it hurt platinum, but palladium got a nice bounce here. How do you see the PGMs?
Still good. The problem, not so much problem, the thing I see with the PGMs, it's hard to pick which one's more attractive. Palladium is done very well. It's been down in the year. It's still down in the year with the rest of the commodities because global vehicle sales are actually down this year for the first time since 2008. Now if global vehicle sales really collapse, palladium will have a problem. But if you look at platinum, it's at the lowest level ever versus gold. I mean, my charts go back to 1970. It's very cheap versus palladium. Palladium's, you replace palladium with platinum with palladium because it's cheaper, but how much cheaper can it go? So both of them are very attractive. And then you look at demand, like demand for platinum from China, imports are up, and supply-demand trends are very positive. It's just a question of how much lower can they go. Also, a key thing about platinum is it got near the low from 2008, which is around 800. It's around 900. Just not much room below that level in platinum.
I'm sensing you think it's a good spot to get in here for platinum then.
It is, and it is. I'm worried about palladium because of global vehicle sales, but they're both so cheap, even versus their costs of production. There's just no platinum and palladium miners that are really making money. I mean, you know that well, so that can't last too long.
All right, Mike, thanks so much for stopping by.
Thanks for having me.
And thanks for watching this edition of the Gold Report. We'll see you tomorrow.